Bitcoin and crypto has been bleeding recently. People think doomsday has arrived and fear is everywhere. But what if I told you that this is the exact moment where real money gets made? The truth is, behind all the fear, there's opportunity. In this video, we unpack why now might be your last chance before you get left behind once again. Now, the first thing I want to talk about is my current thoughts on Bitcoin as a whole. I went long from about 82,800, and as you can see, that trade is currently going really well. My next target for price is $94,035 because that is the middle point of this range that you're looking at right here. Historically, whenever a market is bearish or bullish, well, these pullbacks tend to end somewhere around the middle of the range. So even if Bitcoin is still bearish and we're going to get another massive leg down, well, then I'm at least going to see the middle of the range because that is exactly what price does historically. Now, in case you're confused, what we're looking at here is basically a higher time frame order block, as I mentioned in my last video. But of course, that alone is not analysis enough. Have a look at the global liquidity when compared to the price of Bitcoin. These two are historically very correlated, but as you can see right now, they are basically inversely correlated. You see, the more liquidity there is in the global economy, the higher the chance of a Bitcoin rally becomes. Luckily for us as investors, there's a significant delay between global liquidity hitting the economy and that affecting the price of Bitcoin. That's why we use an 80-day offset on this indicator, and right now, well, it looks like Bitcoin has some catching up to do. What we're looking at here is Bitcoin on the left side of the screen and the S&P 500 on the right side of the screen. Believe it or not, we're seeing one of the biggest macro signals right now because the S&P 500 has had quite the recovery leg. As Bitcoin was dropping, well, so was the S&P 500 and the stock market as a whole, just not aggressively like Bitcoin. What people don't understand here is that when you see the stock market go up, that is typically a great sign that Bitcoin is about to follow. Allow me to give you an example. This summer, we saw exactly what I'm talking about. The stock market made new all-time highs the 27th of June, whereas Bitcoin and crypto made new all-time highs the 6th of November. That is a significant delay. And of course, we can expect the exact same thing to happen here. So whenever the S&P 500 reaches its all-time high at about 7,000, well, 6,930 to be exact, well, then there's likely a good chance that Bitcoin is eventually going to follow. But why are we seeing this delay between crypto and stocks? I'm going to explain exactly why that is using a risk curve. So on the left side of the screen, we have the potential risk, and on the bottom here, we have the potential reward. Now, at the bottom of this risk curve, we have things like the S&P 500 and physical gold. They don't have the greatest potential reward, but there's also basically no risk attached. In other words, these are the assets that investors pivot towards whenever they're uncertain, right? They don't have the confidence or the risk appetite to start investing in higher risk assets. When their confidence then increases, well, then you'll see stocks like Nvidia and Microsoft start to pump because, again, they're singular stocks. They're not index funds and they're not physical gold. So whenever you see Nvidia and Microsoft starting to pump, well, then that's a sign that the investor confidence is increasing. As that confidence continues to increase, well, then you'll see all the mid-cap stocks start to rise, and eventually you will see assets like Bitcoin starting to rise. So it's actually all based on investor confidence, right? We see Bitcoin rally, and once that's been going on for a while, their confidence has grown large enough for them to start investing in Ethereum. And again, later down the line, they have developed the risk appetite to invest in altcoins, and that is exactly when we see an altcoin season. Now, when can we expect things like this right here to happen? When does investor confidence increase? Well, it increases with certainty. So when we have a growing labor market, we have more people in jobs, we have more money in the economy, we have lower inflation, that is exactly when their confidence hits an all-time high. There is one specific indicator that I use every single cycle because, in my opinion, it is the greatest tool to figure out exactly when the market is topping in. That is the pi cycle top indicator. As you can see, in 2017, in December, we got a pi cycle top. What followed was a negative 84% drop, and we saw it again in 2021 before the famous bear market took place, and we had a negative 75% drop. What's interesting is that we haven't gotten a pi cycle top signal this cycle, yet people are still freaking out. Literally every single bear market we've had, well, then a pi cycle top was introduced. So let's have a look at how close we are to a pi cycle top. Every single time these SMAs cross, well, then that is exactly what we call a pi cycle top. Now, as you can also see right now, they are so far apart, they almost couldn't get further away from each other. And so we're not even close to having this pi cycle top, which historically is the beginning of a bear market. So what are my current thoughts on Bitcoin and my future prediction? Well, right now, we simply don't have enough price action for me to give you an accurate statement. But I can tell you this, if Bitcoin ends up closing above this weekly imbalance here at 99,000, well, then my next target immediately becomes the all-time high of 126,459,000. Again, we're still holding this bullish imbalance here, which is a great sign. So if we now start violating this, well, then I think we are going to rush right to a new all-time high. And it reminds me a lot of what happened in 2023 before we saw a massive push higher. We got super close to a low here, just like Bitcoin is right now. Then we completely violated this weekly imbalance and then price simply just took off. Again, if we compare that to right now, we're super close to this low down here and we have a weekly imbalance that we're looking at here. So if we end up seeing that closure above, well, then my next target immediately becomes a new all-time high. There is one specific asset that 99% of crypto traders completely ignore. But if you understand this asset, well, then you can basically predict the price of Bitcoin. And what I'm talking about here is, of course, the US dollar index. So this is inversely correlated to Bitcoin, which means whenever this goes down, well, then Bitcoin is supposed to go up. And right now, it looks like it's trading at a critical level. We've just broken through this 2-year-long support level, and we are now retesting it. And my predictions are the DXY is about to fall. Now, there are two possible scenarios. Either the DXY just continues to fall from this point forward, or it has a slight dip above equilibrium of the range, and then we see that massive drop. Again, I want to see the DXY hit the low of the range here, and if that's the case, well, then Bitcoin is about to rally. Now, what is the dollar index or the DXY? Well, the dollar index is basically the strength of the dollar. When the DXY goes up, the dollar gets stronger. When the DXY goes down, the dollar gets weaker. But why does any of this matter to Bitcoin? Here's the simple answer. Do we have a strong dollar? If yes, well, then that sucks money out of risk assets. If we don't have a strong dollar, that means we have a weak one, and that pushes money into risk assets like Bitcoin. So when currency is weak, people would rather hold assets, and when currency is strong, people would rather hold currency. But why has Bitcoin been falling? Well, there's one good explanation for this. Artificial intelligence and cryptocurrencies are both considered risky investments. Yes, that's right. AI is still technically a new narrative. And so most of the risky capital or the risk on capital is flowing into AI stocks instead of crypto. Now, when the AI bubble pops, that is when it gets very, very exciting for crypto investors. Another reason why the investor confidence simply isn't where it needs to be is because of Donald Trump. This guy can literally change market sentiment within a tweet, and that is exactly why the investor confidence is so low. Always remember this. When you see extreme fear on the fear and greed index, well, then it's time to buy. You can literally have the most profitable strategy just buying whenever there's fear and selling whenever there's greed. Thank you all for watching this update video. Let me know exactly what your predictions are for Bitcoin. Do you think it's going to continue falling, or do you think we have a leg higher?